Property, plant, and equipment is a non-current or long-term asset on a company's balance sheet. It's often shown net of depreciation, which shows its gradual decline in value over time. Let's look at some examples of things that are classified as PP&E. All of these things are core to running a business, and they are the key source of generating cash flow and revenue for the company. So PP&E is clearly one of the most important assets on a company's balance sheet. Let's look at an example of how to calculate net PP&E. Here's the formula. You take the gross PP&E, which is the original value or the original price of that property, plant, and equipment. Add to it any capital expenditures, which are reinvestments in it or additional purchases to it, and then subtract from that all of the accumulated depreciation over time. The result is the net PP&E that goes on the balance sheet. Let's look at an example. Here are some numbers. Imagine a company that initially bought $5 million of machinery. It has $2.1 million of accumulated depreciation. It purchased or reinvested in that machinery $1 million. And in the current period, it had an expense of depreciation of $150,000. Let's calculate the net PP&E. You take the initial $5 million, add the reinvestment or CapEx of $1 million, and then deduct 2.1 of past accumulated depreciation, plus the current period $150,000 of depreciation. So the net PP&E that goes on the balance sheet is $3.75 million. As a financial analyst, it's very important to have a thorough understanding of how PP&E is calculated and how a company uses its assets to generate revenue and cash flow that ultimately create value for the business.